I'm not saying 100% of long-term capital becomes Bitcoin. What I'm really saying is long-term capital is like 450 trillion. I think there's 3% entropic lapse. There's 3% loss in that capital every year, either due to inflation or entropy, whether it's a financial asset or it's a physical asset. And that works out to 13 to 15 trillion dollars a year of inefficiency. And that's just people or institutions owning things and the building falls down, the company fails, right, etc.
The global financial system is unraveling, and the current Bitcoin price crash is just another reminder of a deeper truth. Entropy is inescapable. Each year, about 3% of the $450 trillion in global capital is lost to inflation, inefficiency, and decay, a mind-boggling $13 to $15 trillion vanishing into the void. Traditional systems, burdened by failing companies, depreciating assets, and relentless market forces, seem incapable of preserving wealth over time. But Michael Saylor offers a bold perspective. Bitcoin might be the antidote to this chaos. Unlike traditional assets that crumble under mismanagement and time, Bitcoin resists entropy with a finite supply, decentralized architecture, and incorruptible design. It stands as a fortress of value, even amid crashing prices, promising a durable solution for investors watching conventional assets erode before their eyes. This is no longer a distant theory. As the current Bitcoin price crash unfolds, forward-thinking institutions are doubling down, recognizing its long-term potential. Could this decentralized currency, battered but unbroken, be the key to preserving global wealth in an era of relentless instability? Let's watch clips from Michael Saylor's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Do you know that if you went to China and you gave everybody in China the option to move their money to the US, not all of them would, but a lot would, enough so that the Chinese government makes it illegal to do so. Right? The reason there are capital controls, there's a limit of $50,000 a year, is because if people could, they would. So there's a natural tendency of people to want to move their capital from a less secure, more chaotic, more uncertain place, maybe where their property rights are less. I mean, you remember Cuba when the boat people, when everybody wanted to leave Cuba and come to Florida? Right? People generally want to move from the less secure to the more secure place. They want to move their person, they want to move their money, etc. It's human nature. I think if we come to this siphon analogy, well, there's just so much energy that gets released when you move from an uncertain, unsafe environment to a more certain, safer, more sound environment. If I give you a stock option on the dollar bill and I say, Tom, the dollar bill is zero volatility, but I'm going to give you an option to buy 10 more dollar bills for $1 for the next year. Well, what is the option worth? It's nothing, right? Because the dollar is going to be worth the dollar. I mean, so a stock option with no volatility is worthless. The Black-Scholes equation is the conventional way to value a stock option. Suffice it to say, when the volatility goes to 15, there's a little bit of optionality. When it goes to 60, there's a lot of optionality. When it goes to 120, the option's exploding in value. And let me give you the practical value of it. If you had $1,000 or $1 million, let's say $1 million, you have $1 million in the bank. Well, with zero volatility, you can probably get paid SOFR. So you're getting paid 4% to take the risk of holding dollars in the bank. 4%. When you hold that money in the S&P index with the volatility of the VIX or 15, you might get paid 12 to 15% interest to take the risk of holding one share of SPY, the index. When you hold a share of Bitcoin via IBIT or a Bitcoin, the volatility is 60. You might get paid 70%, 80% to hold that $1 million in Bitcoin. And you're taking the downside risk, but you're getting paid that call rate. When you hold a share of MicroStrategy, if you were holding $1 million of MicroStrategy and you were selling the calls at the market with 120 vol, you could get paid 200% annual interest. You might not even know what it is. You don't know what Bitcoin is. You don't know what MicroStrategy does. All you know is that if it's not going to zero in the next 12 months, someone will pay you 200% interest. So your break-even point is 6 months, right? It's like, if I can hold it for 6 months and it doesn't go to zero, I'm getting paid 200%. I'm getting paid my money back. My break-even point is 6 months on something I don't understand. What I would say is Bitcoin is the first perfect money, the first monetary instrument in the history of the world that is a properly engineered store of value. The second best money is gold, and the second best money has a half-life of 30 years, and the first best money has a half-life of forever. And so the first best is so much better. Of course, intelligent physicists, economists that understand physics, or capitalists that understand physics are going to discover that. And as they discover that, they're going to buy it and build an industry around it and recapitalize on it. And they're going to draw concentric circles of other investors that I basically channel billions of dollars into the Bitcoin ecosystem, Tom, from investors that don't understand Bitcoin. They just want to do convertible arbitrage, or they want to do option trading. There are a lot of people that hate Bitcoin, and they come into the ecosystem because they just want to short my stock. So they short my stock and buy Bitcoin and create demand for Bitcoin, you see. So those are all secondary and tertiary investors. They have capital, they have money, and they want to play some game, whether it's short, long, trading, fixed income. People that have bought my bonds and they just wanted interest on the bonds, and they indirectly funded Bitcoin. But the fundamental physics of this equation is this is the world's first perfect money. That's Bitcoin, the asset, and Bitcoin, the network, is the greatest global open capital network in the world. It is free digital capital, 24/7, 365. 1,500 crypto exchanges are plugged into it, and it is the number one source of credit, and capital access everywhere in the world right now. And so that's why it is performing. That's why it's attracting capital.
Michael Saylor describes Bitcoin as the world's first perfect money, combining unmatched security, scarcity, and volatility to revolutionize global finance. Unlike traditional assets like the US dollar or gold, Bitcoin offers exponential returns, drawing diverse investors, enthusiasts, traders, and skeptics alike. Its decentralized network operates 24/7, providing unparalleled capital access and liquidity across 1,500 exchanges worldwide. As a store of value with no decay, Bitcoin isn't just an asset. It's a groundbreaking financial system, reshaping how wealth is created and sustained globally. Michael Saylor highlights Bitcoin's evolution as the first truly perfect digital money, offering unmatched efficiency, programmability, and global accessibility. He explains how ETFs legitimize Bitcoin for institutional investors, while transaction fees ensure the network's sustainability, even leveraging stranded energy for mining. Unlike traditional systems, Bitcoin empowers economic growth without austerity, acting as a protocol for global prosperity. With its wildfire-like adoption, Saylor envisions the US leading the digital asset revolution, transforming Bitcoin into a cornerstone of modern finance. Let's watch more clips from the interview.
Because the ETFs are SEC 40 companies, that makes them investment trusts. And so a trust company is a special vehicle. It's constructed to own an asset and hold it in trust and not do anything other than hold it. So if what you wanted to do was buy a bar of gold, you might want to buy GLD or IAU. Those are gold trusts. And they're allowed to take your money and they buy gold And then the asset's dead money. It's a dead asset, just, well, let's say a stationary asset in custody, and you have the shares. And if you were to sell your shares or redeem them, they have to then sell the gold and give you your cash back. So think of them as like overnight depository banks. I could have $100 billion in that bank. It's overnight deposits. I invest it in gold or soybeans or oil. And then when you want to redeem, I sell the soybeans and the oil and the gold. I give you back your money. And I charge you 20 basis points fee every year. The network reward is a function of the block rewards of the miners, and they will continue between now and the year 2140, and the transaction fees. And the transaction fee economy is an open free market economy. If you want your transaction to be processed in the next 10 minutes, you have to be the high bidder. And there's only 5,000 slots. And so the most important 5,000 transactions in the world are going to get to the top of the queue based upon the transaction fee of the broadcaster. This is why it's important to have scarce block space, because as long as the block space is scarce, the transaction fees will trend up over time. And as more people want to do more transactions, they will bid up the transaction fees. And right now, they're a small fraction of the rewards, but I think 10 years from now, they'll be the majority of the rewards for sure. And I think by 2035 and onward, most of the revenue that comes from the miners will be based on transaction fees. And transaction fees are a durable business model forever. I mean, every real estate company, every financial service provider, they all work on transaction fees. I mean, it's fine. Like, I want to move $1 billion from point A to point B. Would I pay $10? Of course I would. Would I pay $100? Sure. If you wanted to buy $1 billion building and take clear title of it in Manhattan, what do you think the transaction fees are on that? Right? I mean, you could spend $1 million to move $1 billion. You could easily spend 10 basis points. How about the last time you sold your house? What's the transaction fees to sell a house to someone else? And how long does it take, by the way? Right? So when you think about it that way, like, if I could sell my house in 30 days and it was $1 million house, would I pay 1, 2, 3, 4% interest or in fees? Yeah, I would. If I paid 1% fees, I think that's cheap. Well, 1% fees on $1 million transfer of Bitcoin, right? That's going to support the network. So I think Bitcoin's always going to be 100 times to 1,000 times more efficient to transact in than other instruments. But I do think there will be transaction fees. I think the fees will support the mining network. And the mining will continue forever because there's always going to be stranded energy and there's always going to be stranded capital. And so if you're sitting at the edge of the grid and you have a dam in the Himalayas, well, you're going to want to run Bitcoin mining with the dam in the Himalayas because that's the highest bidder for your electricity. I think that Bitcoin is a digital technology that solves an economic problem that's worth trillions of dollars. I don't think it cures cancer. I don't think it'll stop wars. People had wars after electricity and clean water. I'm just pointing out that Henry VIII dies of gout because he didn't have clean water. And of all the things that Henry VIII would have liked to have bought with all of his power, and he was the most powerful man in the UK, he would have liked that. Right? This thing we take for granted, this thing that makes us go from living 32 years to living 80 years. Clean capital, clean money, digital money, high frequency, programmable money. It is a protocol for prosperity. And I think that if you're looking for a politically sound strategy, the most politically sound strategy is not to tell people that austerity is the solution or bludgeon them to death. It's just to introduce a new technology that delights and enriches everyone and spreads like wildfire. And I think Bitcoin is spreading like wildfire. I think that the US is now actually the worldwide leader in digital assets. I mean, we're going to catapult from being, you know, 25, 30% of the way back from the pack, in the middle of the pack. We're going to catapult to number one because most of the rest of the world is fearful of innovation. If they're fearful of getting ahead of the US.
Michael Saylor's Bitcoin strategy is reshaping corporate finance, with MicroStrategy leading the charge. The firm recently acquired an additional 5,262 Bitcoin, bringing its total holdings to an impressive 444,262 Bitcoin, worth over $40 billion. This aggressive accumulation, funded through equity and debt, signals the company's unwavering commitment to Bitcoin as a treasury reserve asset. By leveraging capital markets, MicroStrategy aims to outpace traditional investment returns, reinforcing Saylor's belief in Bitcoin's unmatched potential for wealth preservation and growth. The company's inclusion in the Nasdaq 100 underscores its influence, encouraging institutional adoption through ETFs and other investment vehicles. Critics question the sustainability of MicroStrategy's approach, citing unprofitable software operations. However, Saylor's vision transcends short-term performance. He views Bitcoin as a protocol for prosperity, redefining how value is stored and transferred globally. This strategy aligns with Saylor's broader advocacy for Bitcoin as the ultimate monetary innovation. He emphasizes its thermodynamic efficiency, scarcity, and ability to capitalize on stranded energy resources. As Bitcoin adoption accelerates, fueled by visionary leaders like Saylor, it's not just a speculative asset, it's a transformative force reshaping global finance. MicroStrategy's bold moves demonstrate how Bitcoin is increasingly central to modern economic strategies, positioning it as a cornerstone of the digital age. As we wrap up, do you agree that Bitcoin is the first perfect money? What risks do you think Bitcoin's volatility poses to both individual and institutional investors? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.